Tom Lee just dropped a headline-grabbing prediction on CNBC. There's a staggering $7 trillion in cash sitting on the sidelines, and he believes it's about to flood back into the stock market. That's right, $7 trillion waiting for the right moment. While the media obsesses over Moody's recent downgrade of the US credit rating, Lee says that's just background noise. The real story, a tidal wave of cash that could send markets soaring. In this video, we'll break down exactly what Tom Lee said, what it means for your investments, and reveal one stock that could ride this rally to new heights. If you care about your portfolio, stick around. You won't want to miss a detail. Before we dive in, ask yourself, what happens when $7 trillion starts chasing stocks all at once? It's not just a rally, it could be a stampede. Let's hear what Tom Lee had to say, then unpack the moves you should be watching now. Tom Lee kicked off his CNBC appearance by tackling the elephant in the room, Moody's downgrade of the US credit rating. While many investors panicked, Lee was unfazed. He argued that the downgrade was already priced in by the bond market, just as it was back in 2011 when the US first lost its AAA status. In his view, this latest move is more noise than substance. The real risk, not a downgrade, but a failed treasury auction. That's the true warning sign for America's debt sustainability, not a credit rating headline. So what does Lee recommend? Ignore the downgrade drama. Instead, keep your eyes on the bond market for genuine red flags. If you see a treasury auction stumble, that's when it's time to worry. Until then, Lee sees the recent market dip as a buying opportunity, a chance to pick up quality assets while others are distracted by headlines. But here's where things get really interesting. While most investors were panic selling, Lee spotted something much bigger brewing, a historic wall of cash, and a market rally that could leave doubters in the dust. Lee introduced a new term, rage sold. During the April market bottom, countless investors dumped their stocks in frustration, only to watch in disbelief as the market roared back without them. Now over $7 trillion is sitting on the sidelines, cash that Lee believes will come rushing back as investors scramble not to miss out on further gains. Skepticism is still rampant, especially among institutional investors. But for Lee, that's bullish. Why? Because when everyone's skeptical, there's more room for the market to climb as those skeptics eventually turn into buyers. He predicts that as the year progresses, we'll see a wave of chasing, investors frantically buying back in, driving prices even higher. Lee's advice, don't let fear keep you on the sidelines. If you've rage sold or are sitting in cash, consider easing back into the market. The potential for a strong rally is real, especially with so much money waiting to re-enter. And remember, it's often when everyone's most skeptical that the biggest opportunities appear. And if you think the rally is just about tech stocks, think again. Lee sees opportunity not just in the Magnificent Seven, but in sectors most investors have written off. Let's break down where he's looking next. Lee is bullish on the Magnificent Seven, the mega-cap tech names like Apple, Microsoft, Nvidia, Meta, and Tesla. These stocks were the first to fall, and Lee believes they're primed to lead the next leg higher. If these giants reclaim their highs, he says, the S&P 500 will follow, and possibly break out to new records before year-end. But Lee isn't just focused on tech. He points to financials, banks and financial firms, as the next big opportunity. Despite rate hikes and economic worries, banks have proven resilient. Today's financials are more tech-savvy than ever, and boast strong credit profiles. Lee sees room for their valuations to rise, especially if investors rotate back into these overlooked names. Looking further ahead, Lee is already eyeing 2026. He sees huge potential not just from possible tax cuts, but from deregulation. Regulatory costs for U.S. companies could be as high as $3 trillion. Rolling back some of that burden, he argues, would be an even bigger boost to corporate earnings than tax cuts alone. And if global trade loosens up, companies that survived the tariff era could thrive in a new, freer environment. Lee's playbook, look beyond the obvious. While tech will likely lead, don't ignore financials, which could see a re-rating as investors recognize their resilience and tech integration. And keep an eye on policy shifts. Deregulation and freer trade could be major tailwinds for earnings and market multiples in the years ahead. For all his optimism, Lee isn't blind to risks. His biggest concern, the American consumer. Right now, there's a strange disconnect. Surveys show consumers are worried about inflation, but actual inflation remains tame. If consumers pull back, if they stop spending or lose confidence, a recession could follow. So while Lee believes the market is set up for a strong finish and a promising 2026, he's watching consumer health closely. As bullish as Tom is, he's keeping one eye on the consumer, because if the job market weakens or people stop spending, that's when trouble starts. So what's the takeaway? Tom Lee remains one of Wall Street's most optimistic voices, but his optimism is grounded in data and history. He sees past the noise of downgrades and headlines, focusing on the real drivers: consumer strength, cash on the sidelines, deregulation, and global trade. If he's right, and his track record is strong, the next rally could be massive, with opportunities not just in tech, but across the market. But what about individual stocks? Lee highlights one in particular that could ride this wave higher: SoFi Technologies. Tom Lee's message is clear: ignore the noise, focus on the fundamentals, and don't let fear keep you sidelined. With $7 trillion in cash ready to move, a rally could be closer than most think. Whether you're watching the Magnificent Seven, financials, or innovative fintechs like SoFi, now is the time to pay attention. What do you think? Is Tom Lee too bullish, or is he seeing the bigger picture? Drop your thoughts in the comments, hit like if you found this breakdown helpful, and subscribe for more deep dives into the market's biggest moves. Let's ride this wave of opportunity together. See you in the next one.